over about your Bucks.
Yeah, it was a rough series, but at least they got 7 games.
Yeah.
And, I give a lot of respect to the Celtics. They played great, and I hope now they win the championship since they beat us.
Yeah, that's absolutely right. I mean, you have a smile on your face, so you're taking it all as you have to take it. Look, you were here last on March 15th. I said almost 2 months to the day. So much has happened since then. That was the day before the Fed hiked by 25.
Yep.
Then they hiked 50 most recently.
Yep.
Where are we now in the markets in your mind?
Look, I think the Fed will raise one more time, but the economy, and I know people are saying it's going to be a lot more.
Yeah,
but I mean,
I'm like, one more time?
No, but it's part of it is you're starting to see that things are really slowing down. That's having an effect. You're going to see that inflation is going to start coming down a little bit. It should. But I don't think the Fed wants a real recession. I would be surprised if that's what they want. But if they keep raising rates, that's what's going to keep on happening.
I mean, you're assuming or insinuating that they can control it, of course, and history suggests that they can't.
I agree, but I think if the Fed keeps raising rates, things will continue to get worse. I mean, the markets right now have gone down. They're down a tremendous amount.
Like 7 weeks in a row for the Dow.
And it's going to continue.
Right,
so I think the Fed has accomplished what they wanted to accomplish, and I think inflation will start getting into check in the next couple of months.
I keep hearing from so many people, no, the economy can withstand this. The economy is very strong. Are you seeing something different? Now, granted,
no.
We're in New York. I mean, we're kind of in a bubble in some respects in New York. You go to the Midwest, as we said at the top, for the Bucks games, and you talk to a lot of people who live in places elsewhere than here. Are you feeling something different?
No, I think the economy is strong. I think it is, but you're fragile. You're strong, and all of a sudden things can turn on a dime. So I don't think you want to go to the point where all of a sudden you've pushed things too much. And I think the Fed is very cognizant of what's going on. So, yeah, maybe you have 1 or 2 more increases, but you don't want to have the markets down like 25, 30%.
This raises a really interesting issue, and that is the Fed put, which people declared dead. And in your wheelhouse, the credit markets aren't going crazy at the notion of all of this and financial conditions tightening. When Richard Fisher was here but a week ago, I asked him, what does the Fed think about the stock market going down? He's like, as long as the credit markets don't seize up, then the Fed's not going to be deterred from doing what they're doing.
And I would agree with that. I would agree with that. But the cost of capital has actually started going up, right? I mean, it really has. I mean, I think for us, we're able to charge more. You're seeing that every fixed income instrument is coming down. So it's harder to raise money today. And that's okay. I think the Fed's fine with that. But the harder it gets and the more credit markets end up starting to have an issue, that's great for somebody like me, but it's not great for the average American.
So when they say Powell should not have taken 75 basis points off the table, you disagree with that? You think if he would have kept it on the table, would the markets gotten much more upset than they already seem to be?
I actually think it was fine for what he did, because I don't think he wants to end up saying, look, yeah, we're going to raise it 75 bips. I think the 50 bips was fine. They'll raise it again. They may do one more. I'd be surprised if the Fed does it 3 times.
Huh. You talk about opportunity, things that are bad for, some investors are good for you. Where have the best opportunities been in the last couple of months since I saw you last?
Well, if you take a look, I mean, for us on the private credit side, you're able to lend money. We were lending money before around sort of 8 to 10. You're lending money now 12 to 15%. Yeah, 12 to 15%. I mean, you've got a lot more people on the sidelines. You're able to charge more. You've got more collateral. I think our business is doing great. But you're seeing out there that there's issues. I mean, people are losing huge amounts of money. In Asia itself, the high yield market has gone down a tremendous amount. It's down about, you had $300 billion of value. Today, it's about $187 billion.
Wow.
So if you sort of think of that, the cost of capital, they were lending around, you could do new issues of $25 billion. For this year, it's been about $2.5 billion. So people need capital. It's not like all of a sudden people have stopped. So for us, we're able to lend in Asia for quite a bit of money. Europe, the same thing. Everybody's nervous, right? And they should be, right? Because nobody knows how long this is going to last. So when there's nervousness, there's a huge amount of opportunity, at least on the private credit side, on the credit side for us.
So it sounds to me like that's much more of a opportunity for you now than, say, corporates or sovereign debt
Yes.
or things like that.
For us, there is. One of the things we're doing right now is we're actually buying COVID, business interruption claims. We're going to people and we're buying the claims that they had against insurance companies on the claims they had for COVID. And we're able to buy those, and then we're going to go against those insurance companies and try to collect on that.
Huh. So speaking of Asia, the last time you were here, which really struck us, is when you said that your view of China had completely changed. I don't know if it's evolved at all in the last couple of months, but what do you see now? Is it only getting worse, your view? Are you pulling back even more?
We're out of China right now.
Totally out of China?
Yeah, we're not. I mean, there's no need to invest in China right now. You can invest in sort of the region. You can invest in Australia. You can invest in India. You can invest in Hong Kong. I know Hong Kong's part of China, but you can invest in the region, and you've got a legal system that works. The worry in China right now is just what the government is doing of sort of with COVID, just closing cities down. That the economy is getting hit pretty hard in China right now.
Huh. You close your offices there? I mean, you pull all your people?
We did. Yeah.
And you don't see an avenue of getting back?
No, look, we may go back, but we'll go back when things open up. I mean, I think right now, there's no need for us to be there and wait. We ended up opening our offices and everybody moved to Singapore. So for us, everything's going very, very well out there.
Wow. So give me your view in the time we have left of the Lasry view of the world over the rest of this year. I mean, midterms are going to cause volatility, and gosh knows what else. We still have, the war going on over Russia, Ukraine. Give me the playbook. People ask you, what do you tell them?
Look, I think energy prices are going to continue to go up. That's definitely going to happen. I think you're going to find that the markets are going to be kind of tough. I think the cost of capital is going to be going up. I think right now you want to be cautious. You want to take your time. You want to get overpaid for whatever risk you're taking. There's no need for you to be a hero today, at least over the course of the next 3 to 6 months. You've got time. You might as well wait, because you're right. The midterms, as to what's going to happen, that's going to create more volatility. That's going to send a message as to where this country is, and we're going to find that out. And that's literally that's 5 months from now. It's coming up. So I think over the next 3 to 6 months, I'd be a little bit careful. You should come in when, you should buy things when you think they're really cheap. But I wouldn't worry. If you miss it today, you'll still have an opportunity in a couple weeks or a couple months.
Is your base case recession, or is that still?
That's my base case.
Your base case is recession.
Yeah, I think you're going into a recession over the course of the next 6 to 12 months.
Wow. So it could even happen in calendar year 2022.
It'd be hard. I think it'll be 23. I think the economy is strong, but there's some fundamental issues out there.
Wow. All right. I appreciate the update from you. Thank you.
Thank you.
Good
Thanks for the time.
Yeah, man. That's Marc Lasry, again, with Avenue. Up next, Goldman.